What if I told you that one of Wall Street's brightest stars, a billionaire celebrated as a genius, a philanthropist, a financial legend, had built his empire on lies? That his wealth wasn't the result of innovation or brilliance, but of deception, manipulation, and crimes hidden in plain sight? This is the story of Richard Kane, a man who fooled American investors, dazzled the media, and enjoyed the trust of U.S. regulators, all while running one of the most elaborate frauds in modern American history. For years, Kane was seen as the golden boy of Wall Street. He promised stability when markets were chaotic. He spoke of security when investors feared collapse. His hedge fund delivered profits quarter after quarter, returns that seemed too good to be true. And as history teaches us, when it seems too good to be true, it usually is. Richard Kane's journey began in the 1980s, a time when Wall Street was exploding with opportunity. Born to a working-class family in New Jersey, Kane worked his way into finance with charm, intelligence, and an instinct for persuasion. Colleagues remember his sharp suits, sharper tongue, and ability to make even the most skeptical investor lean in and listen. By the mid-1990s, Kane had launched Kane Capital Partners, a hedge fund he branded as safe, steady, and reliable. While others promised high risk, high reward, Kane promised consistency. A modest 12 to 15% return every year, rain or shine. To American retirees, pension funds, and charities, this was irresistible. The Teachers' Retirement Fund of California invested. Veterans associations trusted him with their pensions. Even university endowments and hospitals poured in millions. By the early 2000s, Kane's fund managed over $20 billion in assets. He wasn't just rich, he was untouchable. Kane understood one thing better than anyone else: appearance was everything. He courted journalists, appearing on CNBC, Bloomberg, and Wall Street Journal covers. He donated millions to universities and charities, branding himself as a philanthropist. He sat on the boards of museums, hospitals, and think tanks. To the American public, Kane wasn't just a billionaire, he was a role model, the man who cracked the Wall Street code. But behind the curtain, the story was far darker. Kane Capital wasn't delivering steady returns through genius investments. It was operating on three pillars of deception. 1. Insider trading. Kane had cultivated secret channels with bankers and corporate executives. He received whispers of mergers, earnings reports, and government contracts before they went public. With this illegal knowledge, he made trades that guaranteed profit. 2. Offshore fraud. Billions were quietly shifted to accounts in the Cayman Islands, Luxembourg, and Panama. Through a network of shell corporations, Kane hid losses, inflated profits, and concealed his personal fortune. 3. Ponzi-style payments. When his trades faltered, he simply paid investors with money from new clients. Like all Ponzi schemes, it was sustainable only as long as more money kept coming in. Kane's genius wasn't finance. It was illusion. He gave investors exactly what they wanted to see: smooth, upward trending charts, glowing quarterly reports, and the comfort of consistency. Not everyone was convinced. A handful of analysts questioned Kane's too steady returns. One journalist wrote, "If Richard Kane has cracked the code to Wall Street, why isn't everyone following his strategy?" But those voices were drowned out. Because U.S. regulators, the SEC, did nothing. Investigations were opened, but Kane's powerful lawyers and political donations kept him safe. Every time a red flag appeared, it was waved away as envy or misunderstanding. As one insider later admitted, no one wanted to be the guy who accused Richard Kane of fraud. He was too big to doubt. By 2015, Kane's empire was wobbling. The global financial climate had changed, and his insider connections were drying up. His illegal trades couldn't cover the losses piling up. Desperate, Kane doubled down. He convinced American pension funds to invest billions more, promising safety at a time when markets were volatile. Investors trusted him. After all, Kane had never failed them before. But behind closed doors, Kane's staff began to panic. Spreadsheets didn't add up. Auditors were stonewalled. Some employees resigned quietly, others stayed silent, fearing Kane's wrath. The truth finally began to unravel thanks to one man, David Monroe, a mid-level accountant at Kane Capital. In 2017, Monroe noticed glaring inconsistencies in the fund's Cayman Islands accounts. Profits reported to U.S. regulators didn't match records offshore. Billions were missing. When Monroe pressed for answers, he was threatened with termination. Instead of backing down, Monroe leaked the documents to the Wall Street Journal and to the FBI. What followed was one of the largest financial investigations in U.S. history. Federal agents raided Kane Capital's Manhattan headquarters in 2018. Computers, hard drives, and thousands of files were seized. Forensic accountants worked day and night to untangle the mess. What they found was staggering. Over $50 billion in falsified transactions. A web of 300 offshore shell corporations. Bribes paid to insiders for privileged information. And a $5 billion hole where investors' money should have been. Kane's empire was collapsing. When the news broke, panic swept through America. Retirees who trusted Kane with pensions were left with nothing. Universities faced massive endowment losses. Hospitals laid off staff as their investments evaporated. In total, more than 500,000 American investors were affected. Some lost homes. Some lost retirement security. A few lost hope entirely. As one victim told reporters, "We trusted him because the government trusted him. And now everything we worked for is gone." Richard Kane was arrested in 2019, charged with fraud, insider trading, wire fraud, money laundering, and conspiracy. The trial was a media circus. Kane arrived in court wearing a tailored suit, smiling for cameras as if still in control. His defense argued he was misunderstood, that he had simply been too innovative for regulators to keep up with. But the evidence was overwhelming. FBI recordings, whistleblower testimony, and financial records painted a clear picture. Kane had run the largest financial fraud in American history since Bernie Madoff. In 2021, Richard Kane was sentenced to 150 years in federal prison. The Kane scandal exposed a harsh truth. America's financial system is not immune to deception. U.S. regulators ignored warnings. Wall Street was dazzled by wealth and charisma, and ordinary Americans paid the price. The collapse of Kane Capital revealed just how fragile trust can be and how devastating the consequences are when trust is abused. The story of Richard Kane is a story of greed, power, and deception. A billionaire who fooled Wall Street, tricked American investors, and left devastation in his wake. It's a reminder that even the brightest stars on Wall Street can cast the darkest shadows. This was the billionaire who fooled Wall Street. Subscribe now to Dark Wealth Files for more stories of money, power, and crime.